Hello, chart watchers, and welcome to Market Watchers Live with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so you'll have roughly 24 hours. If you'd like to review an older program, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit your ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Aaron will provide me stock symbols from your questions, and I'll use those requests in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week from Monday through Friday, from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to get your feedback. In the lower right-hand portion of your screen, you'll see a How'd We Do section with a link to a very quick survey. Love to know what you think of today's show and any suggestions you might have to improve our show. For those of you joining us for the first time today, welcome to the show. We're certainly glad to have you. And for our regulars, welcome back. Just a couple of very quick announcements before we get going. Greg Morris will be joining Market Watchers Live on Wednesday. Greg has been a technical analyst for many, many years, over 4 decades. And so he'll be providing us his thoughts as to what's going on in the market. On Thursday, Greg Schnell will be back with us. He's going to discuss P&F charts. And then Friday, Aaron will be giving us an educational segment on chart patterns. So be sure you stay tuned for those upcoming programs. It's going to be a busy week, Aaron. I hope you're feeling better, and welcome back to the show.
Well, thank you. And thank you to all of those folks out there who wished me get better wishes. It wasn't the most fun weekend, let's put it that way, but at least the Rams kicked some butt and the Trojans managed to win. And, well, the Ducks, not so much, but it's been a really rough season so far. So,
well, as a Hokies fan, the Redskins fan, I have no sports to talk about today. So I'm going to move right on.
Right. I totally get it.
Yeah, not a good weekend here on the East Coast for me. But no, it's good to hear you back. And you sound like you feel pretty good. So rather chipper. With Monday setup day here. So hopefully we'll have some good ones for everybody.
Yeah, we'll see, huh? I don't know how we did last week. I don't think mine did as good as I wanted it to. And of course, it's one that I actually, full disclosure, did end up buying. So of course, it's not the Aetna one like I called the week before with that giant move, but well, we'll get into that. We'll see in a little bit. So I guess I'll go over the agenda. And Tom, thank you for covering for me. I know how hard it is to talk like the entire hour and a half. So that's not.
Yeah, it might be tough for some people, but you know me, I can keep talking and talking. So
that's true.
Okay. It was all fine, but we're glad to have you back. So I'll let you go ahead and get into the agenda and our first market update.
All right. So we're going to do our market updates on the half hour and let you know what's going on in the market while we're talking to you. Monday setups, we'll see what we have in store and see how ours did from last week. We're doing the agree or disagree segment today. So we're going to be looking at the transports and determining what we think it will do, what transports will do in the next 7 to 8 weeks, I think is the time horizon we were talking about. So we'll be looking at the transports. 10 and 10 to 1, our teaser is Alex, ALEX. That will be our first symbol in the 10 in 10 to 1. So you want to stay tuned, take some notes. Then I have the decision point report for you. I'm going to let you know what our indicators are doing. I also have a little bit of the big four to talk about: dollar, oil, gold, and bonds. So I'll go over that with the decision point perspective. Mailbag and wrap up will finish out the day on the show. So I think I'll get started with the first market update. And here we go. I'm going to start with those candle glance. The candle glance screen of the entire market. Well, not the entire market, but what's going on that's important that we know. And what I found very interesting is when I started looking at these early was the fact that we did get these gap downs, really bad starts to the day for most of the major indexes. But we can see we've already managed to get back up into the positive territory, except for small caps. At least the Russell 2000 is not quite there into positive territory. Treasury yields are mostly unchanged, currently reading 23.95. UUP, the dollar is up currently and staying pretty much at its intraday highs at this moment. Commodities lower, but they are making a move back. As you can see, oil did the same. And so, of course, that has some effect on what's going on in the commodities ETF. GLD, we can see that we had a gap up, but we're starting to get a rounded top here and start heading back down, but in the positive still, GLD 121.40. The VIX is traveling a bit lower. I have some interesting stuff to show you on the VIX when I get to the DecisionPoint report. And advances and declines are about even. Let's go look at our most active right now. And this is how you can do that very quickly. I'm going to look at the S&P 500 most active. Lots of news going on around GE. They seem to be the discussion of the day. And as you can see, it is having the worst day on the S&P 500 right now with not making expectations. I think that's what it was, Tom. And so let me go ahead. I'm going to look at the candle glance here of those most active just to give you a look. And here you can see with GE that slight gap down there, but heading straight down. Looks like we may be having, at least it's paused in its decline at this point, 1931 for GE. Mattel was, I heard, got asked by Hasbro. There might be a possible merge there, buyout. So we can see Mattel's just definitely having a great day with a large gap up and now flirting with its intraday highs. The other interesting chart here that I thought I wanted to talk about a little bit is Ford. I like this flag formation on the intraday chart. So we'll have to see if Ford can bust up above the intraday highs. The intraday highs it set up earlier in the morning. And that's all I have for our first market update.
All right. Appreciate it, Erin. I'm going to go ahead and just bring over the screen here for 1 second, go over a few things before we get into our Monday setups. Couple things. I know that, you were mentioning GE. They actually cut their dividend. They cut it in half. And the CEO is talking, has gone through a number of different items, I guess, that, they're going to take a look at, try to improve their results and their worth for their shareholders. But you can see on the chart here, the stock was actually selling off on very, very heavy volume the past few weeks in anticipation for this. And you can see today, volume already over 100 million shares. We're not even the halfway point of the day. So this is going to be a very, very, very heavy volume day on GE, and mostly with a lot of selling taking place. Now, this is an example, and one of the reasons I wanted to pull this up. You can see that we've now broken to new lows, and you look at the MACD and you say, wow, there's positive divergence. Maybe I'll go jumping in. Well, I think it's way too early to do that because you are breaking down, and I did mention the volume. This is massive volume on a breakdown. So trying to look at just the price indicator, a price indicator like the MACD, I think is a big mistake because you're ignoring the fact that there are over 100 million shares being sold on this move to the downside. This is not a low volume, slowing momentum kind of a move to the downside. I would be very careful with GE. In fact, I would be sitting back and waiting to see where the dust settles here, because with this kind of volume, it's hard to tell where we may close. And if you look at an intraday, I'm going to pull up a 5-day chart, 10-minute. You can see initially we went way down, came all the way back, or not all the way back, but we got back a lot of those early losses, and we have just been steadily declining since then, heading back toward possibly that earlier low down around $19, a little above $19. So GE is definitely a big news story of the day. What I find interesting is that GE started paying their dividends back in 1899. So they have paid a dividend every quarter for 118 years, but they've only cut their dividend 3 times, 1939, 2009, and now 2017. So this is the second cut in the last 8 or 9 years after having only 1 cut in 110 years. So Definitely there's a lot going on at GE. It's not good. The market's been doing really well, and GE has not performed. In fact, heading in the opposite direction. So I would personally be very, very careful with GE, and I'd let the dust settle here. All of a sudden, that yield, which looked really good last week, almost 5%, is now cut in half. So it's going to be, I think, 2.4, 2.5%. So not even a great income producer at this point relative to many of the other stocks in the Dow. Couple things. First of all, economic reports are going to really start to pick up tomorrow. We didn't have anything out today. Last week was pretty light. I think last week we only had jobless claims and consumer sentiment, I think, the only two big topics. And of course, we get jobless claims every Thursday. But this week, we've got the PPI tomorrow. We've got CPI, retail sales, and the Empire State Manufacturing Report on Wednesday. Then on Thursday, of course, jobless claims, along with the Philly Fed survey, industrial production, capacity utilization, housing market index, and then on Friday, housing starts. So the market is quickly shifting from this earnings mindset to an economic news mindset. Earnings, to give you some idea of what we've seen, the last 2 weeks, there have been over 1,000 companies that have reported each of the last 2 weeks. This week, 300 are reporting. So it's definitely slowing down on the earnings front. And so the market's going to be looking a lot more toward the economic news. And the interesting part there is when we pull up the 10-year Treasury yield, I think this is very bullish for equities right now. We have been moving down in the yield, or had been moving down in the yield for about 2 weeks. And just recently, you can see on Friday, we had a really big up day. And even after gapping down a little bit on the yield today, meaning that money was moving into the bond market, we've actually seen a reversal. And now the Treasury yield is back up at close to 2.40% after moving down earlier today to about 2.38. So what's the importance here? Well, I'm going to bring up a chart that I had in my Trading Places blog today. And if you go down under the current outlook, you'll see that I have a chart here, the 10-year Treasury yield, and then I have a chart of the XLF, which is the financials ETF. And generally, when you see the yield making this big move to the upside, normally it's going to be accompanied by a big move up in financials. Financials love to see rising interest rates, especially banks, life insurance companies, investment services, and asset managers. But here you can see the big move back in September in the Treasury yield, and it was coincided by a huge move up in the XLF. Same thing with the most recent move. We had a little bit of a move in the middle of October to the upside in the yield. We went from under 230 up to almost 250, and you can see a quick spike in the XLF there. But so far on this move, after this break of this downtrend, we're seeing a move back up in the yield, and we hadn't really started to follow suit on the financials, although I think the financials are starting to look a lot better right now. So what I wanted to do here is let's go back over here for a second, and I'm going to pull up a chart. This is kind of an interesting chart, but I want to pull up a longer term chart on the TNX. And let's change this to a weekly. And we'll go back, I don't know, 5 years or so. So I'll show you how you can change some of these charts. And then what I want to do is I want to compare this to the relative performance of financial stocks. And so when I say relative performance, when the yield is doing a certain thing, I want to see if financials outperform or underperform the S&P 500. So one of the ways you can do this is you can actually pull up a correlation indicator. And instead of comparing the TNX to the S&P 500, I'm going to compare it to the relationship between the financials, XLF, and versus the S&P 500. So what this should tell me is that as interest rates move in one direction or the other, does the relationship between the XLF versus the S&P 500, does it follow suit? And so let me bring this up here to the top. And I'm going to make the height bigger so we can really get a good idea of what's going on here. And when you look at the weekly on the 10-year Treasury yield, notice that the correlation between the yield and the relationship between the S&P 500 and financials, they tend to go in the same direction. So in other words, when you get the big spikes in the yield, normally you see outperformance by the financial group. And I think that's really important because right now, financials, which have really struggled of late, I think there was good reason for that struggling. You can see that with price action here to the upside, notice that you've got negative divergence. So price momentum is slowing. And what I look for is a MACD centerline reset and a 50-day moving average test. Those are the things I look for when I get negative divergences. Otherwise, during an uptrend, if you don't have a negative divergence, I look to that rising 20-day moving average to provide excellent support. Here we went through it. I think now we're testing a key support level on the financials, and we're getting a pretty nice little reversal here off of the 50-day moving average. I think this could be the beginning of a bigger move in the financials, given the fact that we've seen that short-term downtrend in the treasury yield break to the upside. So that's going to be something worth watching. Now, what would change it, in my view, would be if that 10-year treasury yield were to turn back down and take out the recent low, move back below the 50-day moving average. Then I would be careful with the financials. But I don't believe that's going to happen. I think we're going to see yields rising, and therefore I would look for some outperformance by the financials. What was interesting last week is that we saw the financial struggling. We saw the industrials struggling as well. And if we pull up the sector summary, of course, this is what's going on today. But if I pull up a 1 week chart and take a look at it, you'll see the financials were at the bottom of the heap down here, losing over 2%. And we saw consumer staples actually rally almost 4% over the last week. So we've had a huge move up in a defensive group while we've actually lost ground to more than 2.33% on an aggressive group, the financials. And look at the industrials down there with them. So if we take a look at the XLI, you're going to see a very similar looking chart as the XLF. We had a beautiful move up. We got way ahead of ourselves. Price momentum started to slow on this last breakout. We were very overbought, and we needed these two groups to pull back. So industrials have pulled back. Their RSIs dropped from 80 in half down to 40. And the XLF, if we pull that one up, you're going to see similar, where the RSI was well above 70, and now we're back down at 43. And this is the hallmark of a bull market, where you've got strong, aggressive groups that take time off. And when they take time off, money rotates. Now, you might look at this and say, well, the defensive groups are leading, so that's bearish. Well, it's okay if the defensive groups lead for a bit. I mean, if we go back and we look at the consumer staples group, you'll see that this group has not been leading on a relative basis. Yes, it has in the last week, but prior to that, the XLP has been horrendous. And if we compare that to the S&P 500, you'll see that this has been in a relative downtrend for quite some time throughout 2017. And this is what you want to see. You want to see the group helping when it needs to help, but you don't really want it to be leading the S&P 500 to the upside. And that has not been the case throughout 2017. We are getting an oversold bounce right now on a relative basis, but I still look at all of the areas of the market and see mostly strong areas, healthy. Even the financials and industrials, the fact that they've lost ground these past couple of weeks, it's not unhealthy. We actually got to a point where we were very overbought, negative divergences we needed to unwind. So I think what's going on in the market underneath the surface is actually pretty bullish. And I think with the yields moving higher, that we could see money rotating back into the financials and eventually the industrials as well. So with that, I know we've got Monday setups. I'm going to let you share your setups first. I will say this. We did have, I think last week, you had CDR. So let's
did I?
Yep.
I thought I had Etsy. That was the week before, huh?
Yeah, that was 2 weeks ago.
Yeah.
CDR, I think, was up about 1%.
It's at 584.
Yeah, and it's 589. So you kind of see where we were. I'm pulling up a 6th day, so you can see we're down here in this range somewhere. And so it must have been right at this area, 584. And so you're up about 1%. And when you consider, I'm going to pull up the S&P 500 because I don't know about you, but that's usually my benchmark. I mean, if I can beat the S&P 500, and notice over the past 5 days, the S&P 500 has been lower. So any gain, I think, is a good gain when the S&P 500 has been dropping. So that was yours. And then I had
LIS, I think.
No. I had it was the gambling stock. I've got it on my list over here. I want to say CVS. I know it's not CVS.
LVS.
LVS. That's what it was.
Yeah, you had a 66.64.
Yep, and up about 1%.
Nice.
So we both had winners, both up about 1%, with the market down probably, I don't know, 0.5% or something. So overall, not bad picks, I
Yeah.
would say.
We'll have
Anytime
to
you're
start logging this in a spreadsheet or something, just for curiosity's sake, entertainment anyway.
I've got the last several weeks. It would be kind of interesting. But
Of
anyhow,
course, you're the spreadsheet guy. Of course you
yeah,
do.
I'm a numbers guy. I like to analyze everything.
All
Uh,
right, here we go. Let's
yeah,
see.
so let's do this week. And we're only as good as our latest pick. So just keep that in mind.
I know, I know. And honestly, I mean, I ran my scan and I've pared it down. I ran my scan against the S&P 500 and then I just ran it against, the universe basically, with certain restrictions. If you read my scan, you'll see that, and it's very easy to get to my scan because I've turned it into something very easy. And that is if you go to our blogs area and you just go to the Market Watchers Live right there, and then pull up any article. And at the very bottom of the article, you will see helpful Market Watchers Live links, and you'll get to our Facebook page, YouTube, et cetera. But there is the PMO scan that I regularly use for our Monday setups. So I just want to show you how to get there. So I managed to whittle it down, I guess you could say, down to 5. I think I had about 12. Um, and I'll just give you a quick little candle glance before I go into each one. And there we go. So when I get it into candle glance, I like to see, well, where are we support and resistance wise? Are we getting clean crossovers? That's a nice clean crossover. That's a little messy in there. But we're getting a bottom that's above the 0 line. Looks okay. So these were the ones that I was like, well, I'll just leave those in there because they look like possibilities. And then I looked at some of the possibilities and I still ended up weeding out a couple. But let's go ahead. We're going to start with Coke. There we go, Coca-Cola. And really tempted to take this one this week. I mean, I was this one. I'm really tempted. I still am very tempted, but that's why I wanted you to see it because it was a possible Monday setup. But we got the PMO buy signal today. That's working on it today, and we're getting that really nice breakout. I mean, I put in that auto support resistance line that we like, and you can see price where it is now in the green. We didn't see it in past this point for quite some time. So we're getting a pretty impressive breakout on Coca-Cola. Also notice the rising bottoms on the PMO, rising bottoms on price. So those are always good to see. So let's go next to Halo. And I'm between this one and another one. I'll make my decision after I talk about it.
Talk yourself
into it. Exactly. I'll talk myself into or out of one or the other. I really like this one because we're already looking at a strong scooter. OBV, not anything overly exciting with volume, but it is staying, mostly even. We're not seeing any large dips like you can see back here. So I think the volume pattern's decent. The only thing that really kind of bothers me here is when I look in the thumbnail, I mean, it is rising. Technically, the PMO is rising or it would not have come up. But it is sort of flattening out and it hasn't even made its crossover yet. So that's the only thing that sort of bugs me about Halo. The other one I'm thinking about is Lexington Corp Properties. And again, with this one, clean crossover. When we get crossovers on this one, they tend to be clean, meaning you're not going to get a bunch of, a lot of whipsaw. That area wasn't too nice, but it was still pretty clean overall. There weren't, I don't believe you would have seen changing signals through here. I honestly, now looking at this compared to Halo, I don't think I will pick this, but I see like what you could consider a possible ascending triangle here. There's a lot of white space here, and I'll talk about that when I go over chart patterns. So I think it's an okay ascending triangle at this point, but it's a bullish pattern and the expectation is a breakout. And I think I was thinking about this one just because price wise, even if we come up and hit that overhead resistance, I think I'd still end up with a pretty nice gain on the week. But rather than look at these necessarily as just this week. I want you to have an idea of, they are short-term investments. They're not just good for the next week. They would be good on your watch list. So we've got the PMO buy signal coming in today. With the price of the stock, I think even if we could get up to these areas of overhead resistance, we'd still be looking pretty good. But I like to see the breakout already happen. Looking at Mohawk, again, we're not getting that breakout. See, I didn't even annotate this chart, so I wasn't that excited about it. But we are getting ready to have that PMO buy signal. I'd be looking for a possible move up here to test overhead resistance at this point. So that was a thought, and I'm not sure exactly. Zoomies? Yeah, Zoomies, I guess. I thought this one was also very interesting, but you can see that it's hitting, this is really strong resistance here. And I find that to be an issue. So I would be looking for, I think I'm going to go ahead and go with Halo. I think this one still looks pretty good. We've got the scooter moving up into that hot zone. But the thing with Halo, let's look at it here, is it's already made that breakout. It's testing that area of support. It looks like it wants a bounce. We already have a scooter in the hot zone. So I think I'm going to go with Halo. And at this point, last was $18.10.
All right. Just jot it down so we have that. Okay. Very good. I was kind of hoping you wouldn't pick Halo. I like that one. I like that.
Right? That's such a nice peak there, and then pulling right back to that area of support. Definitely a nice one.
Yeah, I like that one. All right. So let me see here. I'm going to have to pull mine up. And I had a bunch of them this week. And the one I'm going with, this is kind of unusual. The one I'm going with is not in my 11 setups that I provided.
Yeah, are you serious? Well, you were telling me about them beforehand. I'm like, well, 11's a lot. Now you're telling me you have 12.
Yeah, well, there's a reason behind it. So I'm going to go ahead and show you. This is the one I was going to go with. This is the one that I put in my blog today. And only because it was down at a really good support level. They came out with solid earnings. I think it was already built in to the price of the stock, especially the way that we've seen this behave. So I'm just going to go through this one real quick. But this was an area of support. This is a company, first of all, that's in the construction vehicles industry. I know they're with Caterpillar and some other companies that have done extremely well. And this has not been one of the best performers in the group. However, you can see that it went up for about 8 or 9 weeks in a row heading into earnings. And then the earnings came out very strong, but it was a sell-off. I think it was a buy on rumor, sell on news kind of event. And after selling off and establishing a reaction low here, down just below $69, it did bounce back up around 72. And I think it's consolidating. And so as long as it holds on to this price support area, I'm okay. If it breaks this, especially on a closing basis, I'd be really careful because that volume, was heavy. And if we get another breakdown with increasing volume, there's not a lot of other support levels really to look for until you get quite a bit lower. So I'd want to make sure this level holds, have a tight stop. But this is one that I do expect is going to bounce. And I would be looking for it maybe to go back up and retest at 74, 75 area. Now, having said all that, I'm not going with this one. And the one I am going to go with, and then if we might have a minute or so to give you some of the other stocks.
Oh, go ahead.
I'm going to go with PNC. I just got done talking about the financials and how I believe the financials are going to run with with rising treasury yields. And I think PNC looks a lot like the financials as a group. We had higher prices. The MACD rolled over. The last high up here, you can see the volume had just kind of dried out. It ran out of steam to the upside. It needed to pause. It was overbought. Now, after the last week or so, we've seen a pretty good drop in PNC from 138.5 or so back down closer to 130. We've got the RSI not at 70 anymore, but down closer to the 40 level. And if I annotate, you'll see that there's some pretty good price support that comes in right at this level. So this is where we broke out from. This is where we've had some pullbacks too, right about 131.5. And we are trying to reverse today with a little bit of a hollow candle so far. So the price is 132.42. I'm going to go with PNC from this level. If you want to see any of my other setups, if you go to my blogs and then click on Trading Places, just on the blog itself. There's this link. Click here to see my live chart list. And here will be the 11 stocks. And you can kind of take a look at those. There were a few in here that I considered. I like PANW coming down to this support level. JNJ, I think, is a really interesting one. But the reason why PNC is not on this list is I don't normally put a stock on this list 2 weeks in a row. And I thought I had PNC on it last week. But what it turned out, it was not on this list last week. I actually wrote about it in the Don't Ignore This Chart blog. So that's where I had written about it, but I thought I had it in this list. And so over the weekend, when I was looking for setups, I saw PNC and I really liked it. And I was like, no, I just put that one in last week, so I'm not gonna show it. And then I realized that when I after I had finished my list of setups, that PNC was not included last week, and I could have included it this week. So that's why you're not seeing it in my list of setups, but it is my setup or my Monday setup of the week. So I'm going to go with PNC Financial.
All right.
That we have another market update coming.
Indeed, we do. Let's get there right now. Just want to make sure I'm in the right place. There we go. All right, I'm going to start with our candle glance as we usually do and move away from there. All right, that's not the candle glance I want. That was the candle glance of the most active currently on the S&P 500. All right, here we go. What's been going on? All right, like I said, we had a really rough morning with a gap down for most of the major indexes. And as you can see, made it back into the positive territory, but everything seems to be moving sideways now. Look at the NASDAQ, very clear pattern of make that breakout and now take a pause, but it's really struggling here at the intraday high from yesterday. So that is a little bit of a concern, I suppose. Russell 2000, we can see again, it had that really bad open. It hasn't quite made it up to the top into positive territory, but it does appear on its way. Wilshire 5000, mostly unchanged. Treasury yields, mostly unchanged, 23.93 right now. UUP, the dollar is up. Oil, mostly unchanged. And gold is rising, but it does appear to have stopped and paused. The VIX is moving lower at this point, although it spiked in the morning, likely because of the gap down, etc., on the market. So that's not unexpected to see. Let's go to our member page. I wanted to look very quickly at our headlines from our predefined alerts. And as you can see, Russell 2000 did cross below that 1475, but it is trying to make a move back up. TSX moved below 16,000. The industrial sector, BPI crossed above 80, and oil has set a new 2-year high as of last Friday. So, but as we could see earlier, oil is starting to move downward and consolidate. It's actually right there at the zero line. Looking at the scooter movers, let's go ahead and take a look at those. And I'm going to show you our top up, what's moving right now the most. And as you can see, as far as scooters for the large cap indexes, GGP, JD, I know somebody had looked at it. Of course, Hasbro and Mattel talking about merger and buyouts, that sort of thing. So that's why we're seeing such a large move on those scooters. I'm going to take a look real quick at JD because, like I said, I know somebody had actually requested this. And really nice breakout today, as you can see, over this area of previous overhead resistance. And I'm looking at over here to see what kind of overhead resistance do we have left. I really would say I'd be looking at that 46 mark. Yeah, there's a couple of areas where you could make a case for 44 based on what was going on in June. But I like this PMO buy signal, very clean signal, moving upward, not quite above zero, but a really nice oversold buy signal. Look at the OBV starting to make a nice move upward. And of course, with it being on the scooter mover list, it's making a very nice move toward what I consider a hot zone for the scooter. And that's all I have for our second market update.
Okay, sounds good. I'm going to go ahead and just show a couple things before we get into our agree or disagree segment. Kind of follow up on some of the things that Aaron was talking about there and just give you a little bit more detail on some of the happenings. First chart I was going to show you is the banks. I just got done talking about the financials, and we talked about PNC. That was my setup for this week. So I wanted to show you the bank chart, and it's very similar to PNC and to the financial group as a whole. You can see the higher prices that came in, the lower MACD, so we have a negative divergence. You can see the MACD now is back down almost to the center line, and we are at the 50-day moving average. So that kind of tells me that there's a good chance that this selling has resolved itself to the downside. Maybe we consolidate a little bit, but you can see when we broke out, we took out the early March high. And then recently, with a pretty nice gap up, we had gap support, which also cleared a number of highs right in here. So to me, the 430 to 440 area on banks is pretty important. And we're down in that zone now. Recently, we're up at 455. So just a normal bounce off of this support area and perhaps a test of the recent highs would take us back up to 455. And that would be roughly about 5% from where we're sitting right now. The other thing I'd highlighted is during the trend, this uptrend, notice when the MACD is rising and you pull back, a lot of times you'll see that test of the rising 20-day moving average, which we had a couple of times here before we went to a new high. But then once that negative divergence emerged and then we lost price support, we went right through that 20-day moving average and quickly accelerated down to the 50. So I use the MACD as a secondary indicator. But when I start seeing price action move in one direction and the MACD not follow suit, it's at least something to think about and to continue to monitor, to check the volume, to see whether or not breakouts hold, whether or not that rising 20-day holds. And when you start seeing more deterioration in price action and support not holding, that's when you can start looking for additional selling. So this is somewhat to be expected. I mean, you want your stocks to go up every day, but after the financials made a huge run from the beginning of September through early November, it was poised for a pullback. And again, you can see we were overbought. And anytime you get to the overbought area, on the RSI 70 or above, you have to start thinking that maybe the group could use a little bit of a rest. So that combined with negative divergences really set this particular group up for some weakness, and we have since seen that. A couple of other charts that I wanted to show you. This is the oil equipment and services index. Energy, not really doing so well today, and you can see here with the equipment and services index that this pullback is actually testing the rising 20-day moving average. Notice the last time we had a big move, and really, if you look back over 2017, every time we have a big move to the upside, we fail to hold that rising 20-day moving average and come back down. If this is truly an uptrend in energy as a whole and in the oil equipment and services index, we should be starting to see some bullish action off of these rising 20-day moving averages. So today, this group's down over 1%. It's sitting right now at 406 and change. The 20-day is at 405.01. So I think we got a pretty big test coming up here on this particular index, which is worth keeping an eye on. And then the last group I wanted to say something about was the Broadcasting and Entertainment Index. This is where Disney resides. Disney came out with nice earnings. Disney's starting to look pretty good, but we do have an area of price resistance overhead between about 1235 and maybe a little above 1240. So you can see these two lines. Here was a major support level from back in May. We broke down below that, and the reaction high is where I put the second level in. So now we've got to get back through this area to, I think, set this group up more bullishly so that we can trade it using the rules that you normally would trade on the long side with. But also note that this trend line, if you connect the high back in August and then where all the selling took place back in the beginning of September, this happens to coincide right with that level as well. So I think you can see technically, and volume starting to come into this group, by the way. So if we could get a breakout above, say, 1245, I think this is a group that could begin to run again. And, go back to August and you can see that the high was at 1350. So there could be quite a bit of, left in this move, assuming we can clear that resistance area. So I just wanted to mention that. I'm going to go ahead and let you take it, Aaron. So that the question here for agree or disagree is, will the transports, $TRAN, will the transports, or not will, I can't ask a question, it's got to be a statement. The transports will be higher at the end of the year than they are today. Do you agree or disagree? And shoot me your charts.
Okay. I'm going to say that I disagree. So I don't think they're going to um, do well. And here's why. So I'm going to start with the daily chart because we're talking about till the end of the year. So, 6, 7, 8 weeks. I'm going to still, I want to look at the weekly chart as well because my time horizon now is more intermediate term. So I want to look at the weekly as well. But I did want to point out areas of support and resistance as I see them anyway, and what's going on the daily chart as far as the PMO, et cetera. So as you can see, we're now getting to a point where we're testing some support levels that kind of add up here toward the end of December, early February. So I was looking at that as a possible area of support midway in this drop because, hey, if you're looking for support, you want to find it as close as it can be to where the price is at. So I thought that was a decent area of intermediate support for the transports. But I'm more looking at this area as a possible midpoint to a drop. When I've got a PMO that is, moving so consistently lower, we are starting to see it get toward those oversold areas. But I'm still looking at this moving down, and look at the weekly chart. I think that's what tells us that's what's telling me that, yeah, by the end of the year, I don't suspect it'll be higher than it is now. It will be lower. And look at this weekly chart. We have a PMO sell signal that I suspect either kicked in on Friday or will kick in on this coming Friday, because I don't consider weekly signals official until the last trading day of the week has completed. So at this point, seeing that weekly sell signal on the PMO, you can see the volume in terms of the weekly chart is heading lower as well. We've now gone below this previous bottom on the OBV, and that is bad news because right now we should be higher based on where price is if we were looking for a confirmation. But we're not getting that. So my thought is we're going to get down to that 9,000 level. I think we're going to test that area of support back here from 2014, 2015. And when you look at that daily chart, that's that 9,000 level down here. And I think that has a pretty good chance of holding, but that's a long way to go down. So hopefully for transports, they're going to find some support here, but I'm not liking the charts. So between now and the finish of the year, I think the transports will be lower.
All right, I am going to disagree with you, and I'm going to agree with the statement that they'll be higher at the end of the year. I do think they're probably getting close to a turning point, and I'm going to show you why I think that. Here's a chart. First of all, this is a longer-term weekly chart, so this goes back 5 years. And you can see that back in 2013, 2014, we had a really nice channel where the highs continued moving up, the lows continued moving up. And I think what we're in is something very similar to that. We had a huge move in the transports at the end of last year. And so I think some of this has just been consolidation in 2017. Although even with the consolidation, we are continuing to put in these higher highs and higher lows. But I think the fact that we're now kind of testing this trend line, and you can draw trend lines all kinds of different ways. So, you could probably make a bearish argument out of the trend lines, and that's the danger. It's the beauty and the danger at the same time looking at trend lines. But if I actually looked at the tails, which I don't usually do, then this might line up a little bit more with what you're thinking, Aaron, that we could actually come down a little bit further, maybe get close to 9,000, and then hit the support line, this trend line support, using the tails. Now, I tend to use candle bodies, but I'll be honest, I prefer to use those on a daily basis because really the market closes 5 times a week. It doesn't just close at the end of the week. So using a closing price on Friday, I don't know, I'm not quite sure that, I would favor using that. But again, I'm not really a longer term kind of trader. So I tend to stick mostly with the daily charts and just use the weekly charts more as a big picture. But I do think that we are close to this trend line, no matter how you draw it. And I do think we're in a bull market. And when you're in a bull market, I like to try to trade by bull market rules. So I'm looking for entry points along the way. I'm not really looking for weakness in a bull market among transports. So I do see that we were over bought. We got the weekly RSI up close to 70. Now we're back down to 50. I think we're getting much closer to a more palatable entry. So I would tend to favor the fact that transports will rise into year end. So I'm not quite sure how quickly that'll take place. I mean, we can go in and look at different areas of the transports. I can tell you the truckers I'm a little nervous with still in the near term because we're flirting with this 20-day moving average. Notice on the way up, here was a high on the MACD. The pullback held the rising 20-day. Nice little reversal there, bullish engulfing candle. We went up for another couple of weeks. MACD moves to a new high. We go sideways, down a little bit, test that rising 20-day moving average, and up we go again. But this time, negative divergence is in play. We did have good volume on the breakout. So I think the key is whether or not we hold on to price support in the truckers, and that level is going to come in at about 700, maybe just above 700. So you can see we're kind of down around that level. I think if we lose this area, then I think it's going to set up maybe for another couple percent drop in the truckers, which obviously is going to feed into the transportation index. So this is something I'd watch pretty closely if I was in the transports. I think if the truckers break down, then that's probably going to put a little bit more downward pressure in the overall transportation average. If you go into a couple of the other areas, and I'd love to hear your thoughts as well on these different areas within the transports, but I think the railroads really look good. Right now, the MACD is just kind of hovering around the center line, but I think it's been, after breaking out, I think it's just sideways consolidating in pretty bullish fashion. So if you take a look here, we made the breakout in September, came down, actually had a one open down below support. But for the most part, what I see is just sideways consolidation off of an uptrend with the MACD real close to the center line. I think the railroads could lead here into the fourth quarter. And so that's one thing that I think. I don't like the way the airlines have been performing. I'll tell you that much. And then one other,
actually, somebody was questioning, are you consequently, if you're up on the transports, I mean, if you're bullish transports, that means you're possibly bearish on, oil and energy at this point, or?
No, I don't think so. I think, I believe oil prices can go up. If the economy's strengthening, I think oil prices can go up, and it might still have a downside, down effect on transportation, but it may not offset the fact that the economy is improving. And the reason I'm looking at the economy improving is because we've got treasury yields continuing to rise. And so as long as treasury yields are rising, that tells me folks are moving out of the bond market. And you normally see that in a strengthening economic environment. So I think it just comes down to, it's kind of like looking at how home builders and interest rates. Interest rates have been rising. So why are home builders doing so well? Who wants to buy a house when they have to pay more in interest? Well, if the economy is improving and they feel better about their jobs and they feel better about their wealth, they don't mind paying a little bit more in interest. And so kind of spurs folks on, I think, to make that decision. It's not quite the same, but I think there's a little bit of a correlation between the two. So I think you could be getting a better global economic demand picture out there, which can drive transportation higher, even though it also is driving some of the energy prices higher as well. One last thing I wanted to point out, though, on transports, I almost forgot, is look at the fourth quarter seasonally over the last 20 years. So far, this fourth quarter, we have not been very strong. In fact, the transportation average has been going down almost since the beginning of October. But I don't think I think this is pretty obvious that October's gone up 80% of the time over the last 20 years, November 75% of the time, and December 74%. And you can see that the monthly average gains during this period tend to be very strong. So while we're starting off weak, I think the fact that we've got that bull market intact, we've got the long-term trend line still going up, I think we're going to see a recovery in transports before the end of the year.
All right. Well, I know that, there's, I believe it's Charles Dow, but they talk about the fact that, when you have the transports doing well, that's good for the market. That means goods are moving. Basically, what you're talking about, even as far as, yields and the fact that, yes, oil could go up, but it shouldn't affect transports too much. That's one of the theories that is out there. If transports are doing well, then that's good for the market. So if the market's going to continue up, then transports should do fairly well. But I'm still going for it'll be lower by the end of the year from what it is now. So
Okay, that's
that'll
fair.
be fine. We might as well have a difference in opinion.
Yeah, and I agree. Looking at the daily chart here on the transports, I don't see a whole lot that's going to just stop the selling here. But then, you take a look at the weekly chart, and you do have that trend line. So anyhow, one of us will be right since we went opposite.
Well, exactly. We won't know until the end of the year too. Probably should write a note to see what happened.
Exactly. All right. Well, we got the 10 and 10.
Indeed. Quite a few requests as always, but we did say that we were going to start with Alex, Alex, name of my daughter.
I have not cheated yet. Alexander and Baldwin. Well, we're sideways consolidate. I mean, when I look at a chart like this, I'll be honest, I don't get too excited. We're in a bull market. I'm looking for stocks that are trending higher, that have strong momentum and are pulling back to key levels, or are just making major breakouts. And when I look at this chart and I annotate it, all it really does to me is just kind of strengthens the idea here that we're going nowhere. I mean, we have a decent size range, $7-8 in 2017, but really we're just simply going sideways. We have one downtrend followed by an uptrend, followed by a downtrend, and so forth. And if you look where we are right now at 44, we're almost right in the middle of this trading range. So for me, this just isn't a trade. I would pass.
All right. Next one on the list is ASIX, ASIX.
All right, so we got Alex, and now we got ASICs.
Yes.
All right. I like the move back down to the 50-day and now the bounce off of it. So I do like that. It's not a very heavy volume stock. I think if you go back here, you'll see that there are a number of days that volume might be as low as 100,000 shares or less. So that may have an impact on what you think of the stock. Really, since it made the breakout back in September here, we saw a beautiful move to the upside, volume expanding. We got incredibly overbought. And this is one of those cases, and this is what you have to be careful about in a bull market. Everybody's getting used to the bull market because we've been in it for so long now. But when you get a stock that's moving up like this and gets into overbought territory, when you're in a trendless market and you get overbought, you think, okay, I better sell. That's not always the case in a stock like this that's continuing to move to the upside. Instead, I would use more momentum indicators like that rising 20-day moving average to let you know as long as you stay above it, you can continue to ride with it. But on the most recent high, late October, early November, you can see we put in higher highs, lower MACD, and then we went down just recently and hit that 50-day moving average. You can see the MACD getting close to a reset at the center line. I think this one is going to consolidate. So I would be looking for a trading range between 40 and 46. We're right in the middle of it right now. I think, I'd keep my hands tied at this point. But literally as early as Friday morning, or as recently as Friday morning, I should say, we were down close to the bottom of the range. And so anything back down around 40, 41, I think your reward to risk starts to line up much better.
Okay. Next one we have is MTZ.
Mastech.
Mm-hmm.
All right. Another one, that was a pretty big reversal, bearish engulfing on massive volume. But the overall trend, I think, continues to look like it wants to trend higher. So, and you can tell I'm not really overly impressed with everything here. So it's not a stock I would trade. I want to be really impressed if I'm going to trade. But I think for now, this is the range I would watch. After setting a new high here, the fact that it went back down and put in this reaction low on this kind of volume, closer I could get it down to 38.5, 39, the better I would like it. We're sitting at 42 and change. And again, our recent high was up at 49. So I think we're in the middle of a range. I do like the volume coming in recently, but that hasn't changed the character here of the chart, which is mostly sideways consolidation. So I'm going to pass on this one. I like this one a little bit better than the other one that I showed that was sideways consolidating, only because as you move from the left side of the chart to the right side of the chart, I think there is a subtle uptrend in play here, but I don't see an entry or a trade right now in MTZ.
Okay. The next one I have is for our Canadian friends out there, RRX.to.
All right. I do like the break of the downtrend, and I like the volume that's been coming in recently. So this is kind of taking on a look similar to some of the other, energy, commodity stocks, and so forth. So what I'm going to annotate here for me and what I like is the fact that this downtrend has been broken. So I don't know if it's an exact channel. I'd have to probably pull up a longer term chart, but definitely the highs there. I think you can see that we've cleared this downtrend line. The other thing that maybe you could look at is this one of these over here, maybe this one right here being a left shoulder. Here's a neckline head. It's a downsloping neckline, which I would prefer a slight upslope to it, but then the right shoulder, and then clearly a move back up on heavy volume to break. I'd watch this rising 20-day moving average as support. If it pulls back and I was looking for entry, that's where I would get it, and I'd keep a fairly tight stop. I don't want to get back into a longer term downtrend. So if we are truly turning the corner and we're now uptrending, the MACD looks really strong right now. We should hold that rising 20-day moving average. So that's what I'd look for.
Okay. The ever popular Caterpillar, CAT. Interesting gap support being tested here.
Yeah, I'm a fan of Caterpillar. We're in the middle of that gap. Huge volume to accompany the earnings, the blowout earnings that Caterpillar had recently. I think this is one of the stronger stocks, but there was a lot of good news built in. I mean, look at the action here on the way up prior to earnings. Notice here when we gapped up, it was more sideways. Then we gapped up and continued moving up. Here, it was already a lot of it was anticipated. So we get the big gap up, black candle on big volume. I think we're just setting ourselves up here for frustration and sideways consolidation. I like the stock. I think eventually it's going to break out, but it may be a little bit of time before we do so. So I think that this sideways action could be frustrating and a lot of churning back and forth. The closer we get down to 131, 132, the more I like Caterpillar. So below 135, I think it starts to get more interesting because I do think this could be a trading range. So you can simply pick off some trading profits from time to time.
Excellent. The next one I have for you is XOP.
All right, XOP. So we will get back into the energy area. Yeah, this one I think does set up a little bit better. I really like the group until it proves me wrong. This one actually has an upsloping neckline. It maybe a little bit more than I would like to see. But notice that as we came down, we put in these lower highs and lower lows, nice little channel. But I think this has been broken, and I think we now have a really nice uptrend in place. So I'm going to draw a line here just to kind of connect these lows right in here, somewhere along this line. And then the most recent high that we just broke out above right here. So, and then you've got the rising 20 just above that. I think the 34.5 to 35 area is going to be key for the XOP on any pullback. In fact, if I was looking for entry, that's where I would be looking to hold price support, hold the rising 20-day moving average, and then bounce from there. But this whole area of energy, I think, has changed the character of its chart from a downtrend to an uptrend. And so now I would be trading it based on bull market rules until it proves me wrong.
There you go. Yeah, I think you could even make a case for a flag continuation or a symmetrical triangle pennant to that flag. All right. The next one we have is ECA.
All right. This is in Cana, and I know this one just broke out. This was on my strong earnings list. And we just had a really nice hammer that printed on the 50-day moving average. But let me show you this one, I think, which also looks to me to be like a bottoming pattern. But you can see the left shoulder, the neckline, the head, the right side of the neckline, the right shoulder. Look at that hammer right there. And look at the volume coming in on the right side. Normally, what you would see if this was a continuation to the downside, you would not see this kind of volume coming in on the moves to the upside. So I think all of this is confirming. I think a pullback to about $12, we're not far away, tests not only the neckline, but also tests that rising 20-day moving average. So I like ECA. Better entry would be if we can get it about 2%, 2.5% lower.
Okay. Three more. XBI, the biotech ETF. I know we talk biotechs, or we'd had for a couple months. It's been not on our radar so much.
I've got, oh no, I did. That was the seventh one. My bad. Okay. So we got three more. And what was that one?
XBI, biotech ETF.
Yeah, biotechs are starting to annoy me a little bit. I'm not trading any right now, but I really like ILMN. It's in a beautiful bullish ascending triangle pattern, and it's clearly outperforming its peers. But I want to see some strength in the group before I consider jumping in. This is a pretty big area. I mean, we had this top at the end of July. After the run, you can kind of see a nice little cup, although we didn't really have much of a handle. We went above, and maybe you want to call that a handle, but I don't like to see the right side of the cup like that above the left side. But anyway, once we got above 82, 82.50, we held for about, looks like 8 to 10 weeks. And we're threatening to break down to the downside. And there are some stocks in the group that are not performing nearly as well as I would expect it. I mean, Celgene's an obvious um, big sell because of the huge volume with the gap downs. But even some of the more stable, Amgens in this space have really struggled to perform recently. This is an area that I think this group should turn. I mean, we were up at 88, 88 and a half, and now we're back down to 81 and change. That's a pretty decent pullback. Healthcare, the XLV, is down near a very key price support level at 81. So I would expect money to rotate back into healthcare, and biotech should be a beneficiary. But that wouldn't change my thought process, keeping a pretty tight stop here. I would like to see a reversal, and I might hold off until I got a long tail to the downside, and then I've reversed back up above.
Okay. We have two more. FDC is the next one.
All right, FDC. First data. All right. Wow. We just recently lost some pretty good support after going sideways, after consolidating sideways. But then we came down, finally tested a price support level from a longer, looking back further back. So here was the second area of price support. See how we broke out above this top and almost a triple top there. Volume increased. We never went back and tested this level until just recently. I think those tails that went in at the end of last week are very important on a technical basis now. So if the stock were to trade intraday much below 1650, 1660, I would treat that rather bearishly. I would be careful. But the other area that the stock just lost was down 1750. And notice the declining 20-day moving average now is getting ready to move into the top of this zone. So I think we're in a trading range, and maybe even, with this recent low, let me just drag this down. That's the trading range that I would use for now. If we can break back up above 1750, I think this starts to look much more bullish. But if we go down and we fail to hold 1650 or 1660 and that volume picks up, I would be careful, because the next major support level, I guess you could look at maybe 16 as gap support. But from a price support level, I'd be looking maybe down around 1470 or so.
All right. The very last one, PCAR, PCAR.
All right. Well, that was one actually I just talked about. That was my setup in my.
Oh, that's right. I apologize. I wasn't listening so closely.
Great. So
I'm in the chat room, just to be clear. I don't ignore Tom. Let's see the next one. Then let's go ahead and do AMD.
Yeah, I would just say on PCAR, I'm in it. And if it goes much below 68.50, I'm going to take a quick loss and get out. So what was that last one? I'm sorry, Aaron.
Last one, AMD. Let's just do a big one.
Yeah, I think AMD is just showing bearish characteristics right now. I was in this one until earnings came out, and I got out before earnings, and I'm just seeing nothing really to interest me at this point. Intel's been performing great. It seems like that torch has been passed from AMD back to Intel, and you can see we had a decent uptrend line in play. We had these overhead tops that came in around 15 and a half. I expected this to resolve itself to the upside. Instead, we got heavy volume selling on their earnings report. And notice when it bounced, where did it fail? At the declining 20-day moving averages. It now moves back down toward the recent lows. So this is not bullish action at all. And I wouldn't be surprised to see AMD going back down and testing support maybe in the $9.50 to $10 area. So I'm avoiding AMD for now.
All right. And that completes our 10 and 10. And I will go ahead and grab the screen and get started with our final market update.
Sounds good.
Mm-hmm. Okay, here we go. All right, let's go ahead. I haven't looked at the market summary today, so I'm just going to go over the market summary as our final look here. Actually, you know what? I want to do those candle glances because I really want to see what they look like. And then we'll go to the market summary. Here we go. See if there was much change. Now, what we can still see that, earlier in the day, it was a really rough open, but price came back into the positive. Now seems we're just hovering near previous intraday highs for the day as far as the major indexes go. Russell 2000, though, not quite able to get back up above the zero line. So I think that's pretty interesting. I will be looking at IWM during the Decision Point report. We can also see that the dollar is rising. It is pulling back after an intraday high was set. Oil is mostly unchanged at this point. And we can see gold is up slightly. It gapped up on the open, but we haven't done too much more since then, staying right near the intraday highs for the day. And now I'm going to go show you that market summary. And here we go. Give you different ways to look at what's going on in the market. So you can do this on your own as well. All right, I'm going to just sort by percent change. And when we look at the major indexes, utilities are certainly leading the day, up 1.25%. And again, there you go. Russell 2000 not able to get into positive territory, whereas every other major index that we cover here on the summary is in the positive. Sector ETF or spiders, utilities leading, not a surprise because we saw the Dow utilities above leading. Energy is pulling back as well as industrials. Both are down a little bit more than 1/3%. And we can see that as far as industries, again, utilities, networks, REITs near the top, and oil services, oil not doing quite as well today. And again, I'll look at that chart as well. Retailers also near the bottom. And as far as our international ETFs, we haven't looked at these in a while either. Hong Kong, Singapore are the leaders. And we go down to see the laggards. We're looking at the UK and the India ETFs, both down over 1%. And that's all I have for our final market update. Did you have any comments? And I'll get my DP report ready.
Look, I always have comments, so this is kind of I'm sitting here, kind of looking at everything, and no, I mean, I really am keeping an eye pretty closely on that 10-year Treasury yield, and so far, I mean, we got a lot of economic reports coming up here over the next few days, and I like what's going on with the yield, meaning that there's selling taking place in the bond market. We're seeing the yield rising off those lows from last week. I think that's a positive. And kind of watching a lot of these financials. I pulled up earlier the DJUSBK, which is the bank index. That seems to be strengthening right on its 50-day moving average after having a recent negative divergence. So really just more of the same. I thought I saw earlier that the gold miners were actually doing okay. The DJUSPM. So maybe I'll just pull that up real quick and just show that. I'm not a fan of this, by the way. But let me just pull up what I was looking at here. You can see the downtrend and the fact that we lost some price support back here when we broke out above the late July high. See this pretty easy to see breakout, retest of support. Looked like it was trying to move back up, and then it fell apart. And that always bothers me. I mean, again, if you're going to play by bull market rules, broken price resistance should become solid support, and it was not. And the problem is once this failed, there was no moving average down below. You were already below the moving averages. Now we've seen the MACD move in the negative territory, and we're trying to hold on to what maybe is the next area of support. We could use that reaction low right there, just below 80. And then the breakout of the June high would be next, around 79. So that's an area to watch, but it's just this index is acting very bearish to me now. After breaking down below a price support level it should have held, notice it goes back up, tests the declining 20-day moving average, and starts to roll back over again. So I'm not a fan of gold. I'm not a fan of gold miners. Even when we were getting the breakout, I admitted from a technical perspective that they looked better, but it's not really where I want my money. I think interest rates go higher. I don't know about the dollar because it just depends on how quickly our interest rates go up relative to interest rates around the world. If ours go up faster, then I think you're going to see the dollar continue to move to the upside. And I don't know. I think at best, we'll probably have a neutral environment for gold. And at worst, I think it's going to be a bearish environment. So I'm just not looking into that group. And I think the technicals right now are bearing me out.
Yeah, and I'm going to talk about gold shortly as well. So thank you for helping me get ready here. All right, so I'm going to start with the major indexes. I'm going to go into our indicators for the very short term, short and intermediate terms. And I'm also going to look at the big four, dollar, oil, gold, and bonds. So if you want a little bit more longer term picture, I highly recommend you go to the DecisionPoint blog. Carl Swenlin, my father, wrote the DecisionPoint weekly wrap on Friday, and he goes over weekly charts for pretty much all of the major, well, for the SPY and then also for the big four, dollar, oil, gold, and bonds. So you'll probably want to look at that. What I wanted to point out, I'm just going to go through the four DecisionPoint scoreboard indexes just to give you a feel of what's going on. And what we can see here right now with the Dow, and it's really early, but I could actually see a possible head and shoulders getting ready to form here. But we're talking about, we don't even have a right shoulder yet. So just food for thought, but I don't know if that's exactly what will end up coming through. But we have a PMO sell signal here. And of course, we broke down out of that rising trend channel that we'd had in motion here since September, October. And so you don't want to see that, obviously, but you can see the 20-day EMA is still holding. So I'm not overly concerned about the Dow. And if I look at the weekly chart just very quickly, we're still pretty much hovering there right on the top of this rising trend channel that I had annotated earlier. You can see some deceleration, though, on the PMO, but ultimately it's still rising nicely. Looking at the NASDAQ, this is the only one that's still holding on to a PMO buy signal. And as you can tell, it doesn't look like it's that interested in losing it at this point. We are seeing, obviously, some deceleration. We're seeing it flattening out, but it's still actually rising. And when you look at the S&P 500, you'll see not the case. But I still think we're looking for that. I'm looking for a pullback. I'd like to see it get down to that 6,200 level. But honestly, again, bull market wins being what they are, I have to say it's hard to imagine the Dow, having that difficult of a pullback just yet. NASDAQ weekly chart, we can see I was looking at a bearish rising wedge for a while, but we can see we got a bullish conclusion because it's supposed to be a breakdown out of these rising wedges, but we got a bullish conclusion. So to me, whenever I get bullish conclusions to bearish patterns, I find that to be especially bullish. So again, hard to get really bearish on the NASDAQ at this point, or the NASDAQ 100 as we're looking at here. We've got that PMO buy signal on the weekly chart. It's just things aren't looking that weak right now. OEX S&P 100. We're holding this level of support at that previous high that we had back there in mid-October. And I like the look of that. Again, I think, we might be able to make a case for a head and shoulders forming, but I think it's a little bit early. Do not like the PMO, though. Look at this. I mean, not only did we get the sell signal, but it is heading straight down right now. A lot of negative volume there, which has pushed the OBV lower. But you can still see on the OBV, still have rising bottoms, still have rising tops. So I'm not overly concerned when I look at that volume pattern. S&P 500. As we can see, we've broken down below that rising trend channel. If you recall, the NASDAQ is sitting up on top of its channel. But we're seeing that the S&P 500 certainly has more weakness. At this point, I would say the NASDAQ of all of those four DP scoreboard indexes is set up at the most bullishly at this point. I don't see like a serious pullback. And actually, Carl and I happened to be on the phone this last weekend, and we've been talking about what might happen by the end of the year and into next year. And we're both pretty much bullish up through Christmas. I mean, you've got the Santa Claus rally, et cetera, et cetera. But once we hit January, that's usually when the hangover from the holidays hits. And I suspect, Tom, I haven't looked at the charts, but typically January not so great. So I we're not expecting to see anything and as far as a giant pullback between now and the end of the year.
Yeah, I'll just throw in there. January, actually, since 1971, is the best month of the year for the Nasdaq, but not so much for the S&P 500. So the S&P tends to do really well in November and December, and then does about average. I think over the last 67 years, the S&P's averaged 9% a year, and January, I think, slightly better than that. So maybe a little bit of slight bullishness in January, but really for the S&P, October through December is where we tend to see most of the strength.
Yep. All right. So that does kind of go with our talk that we had earlier. Okay, so let's move on here. I want to show you the weekly chart very quickly for the S&P. Currently, we still are on a PMO buy signal, but we're seeing deterioration of the PMO. It's decelerating now. Looks like it might want to top. And, you're looking at tops possibly here declining. And of course, the tops are rising here. What I used to tell people when I looked at these, we're still in a nice rising trend. But, even we can stay in that rising trend and still pull back and be in that rising trend channel. You could see a pullback all the way to 2,500 and still be considered in a longer term rising, rising trend. So it's hard to get too bearish as long as we keep holding up on these rising trend channels, keep holding up. IJR, S&P 400, very quickly here. Coming down towards a support area about 180. We are on a sell signal, and it is slowly moving lower. But, I'm looking at that scooter. It does want to increase here, giving us some strength here, relative strength. We can also see the unbalanced volume. It is starting to head back down, but we're still where we would have rising bottoms. So I'm looking at that 1.8 area as a possible pullback and a bounce from there on the S&P 400 and IJR, the S&P 600 daily chart. Well, there it is. Okay. So we already broke down from that area of support that we've seen on some of these other charts, and we're heading further down. But we've managed to see, I see that 50-day EMA is actually holding up as support. We're getting a PMO that's getting toward that zero line. If there truly is some internal strength here, we should see it turn up before the zero line. But right now, the 50-day EMA is holding, but if we see a close below that 50-day EMA, I would definitely be looking for a move down here to test that support level at that July high. And IWM, which I promised to show you. And again, you can see with these smaller caps, definitely more of a declining trend that they have been in when you compare it to, say, the S&P 500, a lot different in terms of characteristics of what's been going on. We had a really nice rally here in September for the small caps. They really caught up to the big indexes, but since then have really fallen back. And the larger cap indexes are still doing, fairly well in comparison for sure. We're on that PMO sell signal. I'm still looking for a pullback. You've got, again, you don't have a close below that 50-day EMA, but if we get that, I'd be looking for a move down to that 144 area near the July high. So what are our indicators showing right now? What I wanted to talk about a little bit was the VIX, because everybody tells me, why do you invert your scale? That drives me crazy. Well, for me, as I said, I use the VIX in a little bit more of a shorter term fashion. And so for me, when you get an unexpected push of bearishness, sentiment is contrarian. So if I get an impulse or an initiation with just a boom, bang, a lot of concern, you get it outside the Bollinger Band on the bottom, that to me is oversold. So for me, when it gets higher like that, when people start getting especially bearish, and when you're looking at Bollinger Bands and you're looking at a shorter time frame, that really gives you an idea of how much, how different it is. And so what I'm looking for are those lows. Right now, I'm pointing out the bottoms so that you can see what typically will happen after you start seeing a push down here. outside that Bollinger Band. And, you can see that that's typically, the kind of thing you're going to see right after that. So that's what I use it for. And that's why I invert my scale. If you're looking at it, I think in a little bit longer term type of indicator, then not necessarily the case. But I think in the case of the shorter term, and again, you can see it is pretty accurate. So right now, we had on Thursday, we'd poked down there below. That it looks like didn't turn out to be much of an exhaustion. We didn't get much out of that. In fact, prices still went lower. And now we're getting ready to puncture that bottom of that Bollinger Band yet again. So at this point, since we're looking at a declining trend that's been in effect, I would be looking at a puncture of the lower Bollinger Band on the VIX as more of an exhaustion and look for, you're looking an exhaustion of the decline. I'm looking for prices to move higher over the next day or two. And right now you can see we're seeing that move right now. And let's see, let's go to the short-term indicators. And short-term, I consider, days to a week or so. That's my short-term horizon. Intermediate term being weeks, usually, and then months for longer term. That's just so people know what I'm talking about when I go over these indicators. So short-term indicators, I again have marked off bottoms that we see in these indicators and what happens. These actually down here are IT indicators, and I'm going to show you those on the next chart by themselves. But I've put them in here just to give you an idea of when these bottoms tend to be better. And that is when we can see the intermediate term indicators starting to decelerate or turn around. That's when you're going to get the best reading out of these indicator lows. Well, right now, of course, we've topped, and you don't want to see that. And that's obviously, when you look in the thumbnail, characteristic of a decline that we're in the middle of. Don't like to see those intermediate term indicators turning down. At the same time, we're getting short-term indicators turning down. So at this point, normally you could read these, oh, this is very bearish. But again, we're still sitting up here. Look at this. We're still sitting up on top of this rising trend channel. It's very hard to get very negative or very bearish, even though we've got topping action here going on our short-term indicators. I think at this point, we're looking for that consolidation, maybe a little bit more of a move across. And that, I think that the indicators support. I'm not looking for a big time pullback or decline because the tops in these indicators have just not resulted in that because we are in such a strong bull market. But let's look at these intermediate term indicators all on one chart. Here we go. And in this case, we've hit a top on these indicators, and I really should have annotated these at tops. But typically when you get a top in these indicators, you're going to start seeing some consolidation, or you're going to start seeing a pullback. Here's some examples way back here, back in 2016. You can see it didn't turn out to be especially awful. We ended up with a little bit of a decline and then moving a bit sideways before we saw some bottoms on these indicators. So the fact that we can look at these indicators, and I think you could put the PMO in that category as well, lots of oscillation here above the zero line. Yes, we've dipped a bit below, but usually once we dip below, we bottom and start hitting back up. When we see these indicator oscillators oscillating above the zero line, that is telling me that there's some internal strength. That's what you want to see. That's what will continue to support a long-term bull market. And that's what we have right now, is we're seeing most of the oscillation occur over the zero line. There's internal strength here still in the intermediate term, which is why it's pretty much impossible to get bearish when you look even on these tops, even with these tops in these indicators. And you can see these top right back here. So we got that initial decline off of them, but look at this. They've been able to unwind even as price is moving higher. So that just tells me again that, oscillators have to oscillate, and it's taking advantage the best it can of some sideways movement. You had a little bit of a decline. There's some sideways movement. It's taking advantage of that and unwinding itself. And I think that that is positive still for the intermediate term. Finally, let's look at the big four. And I know we're getting here on our end. Looking at gold. I've been very bearish gold, and I'm not ready to get especially bullish right now. The last time I wrote in the DecisionPoint blog, we had just gotten this buy signal. You can see the scooter is rising. I'm going to look down here. The discounts on the closed-end fund, PY or PHYS, the Sprott Gold Trust, we can see that discounts are moving downward, and that means that people are showing interest in gold right now. And so that's what's happening. We're getting a little bit of a bounce here off of this area of support at that February top. The PMO, it's topping today. We're getting ready, I think, to come down here again and test support. I have to say that I'm not bullish. I would have to say at this point I'm neutral. We're getting the top here on that PMO. Price has been able to hold this 1265 level. I really thought we were going to break down below it when we got this decline. PMO looked bad. We'd gotten that intermediate term trend model neutral signal. You can see there where the 20 crossed below the 50. Just not looking good, but it managed to hold on to this support. I want to look at that weekly chart. How important is this? Well, there you go. We've been looking at that long-term declining tops trend line, managed to bust out of it, but now we're pulling back to test it. And you can see we're sitting still above this 43-week EMA. I use a 17 and 43 week. These are arbitrary, but Carl and I find that these work better in terms of like our trend model does. So that's why we picked those. I know we're going to get questions. Why are you using those? The PMO is on a sell signal right now on gold, and it's heading lower. I have to say, I would expect to see gold moving back down here. But at this point, it's holding that 43-week EMA. So as long as it holds that, I'm going to stay pretty much neutral. But if we lose that 43-week EMA, then that's going to be a different story. I skipped the dollar, but let's get back to the dollar here. We'll be looking at this one for chart patterns when I go over those on Friday. But this, I think, is a really great textbook setup, reverse head and shoulders. It's a bullish pattern. And the expectation, the calculation of a minimum upside target pretty much would bring price right up here to that top in June. I still think that that's a possibility. Don't like this, obviously, when you see a PMO turning down and getting ready for a clean PMO sell signal. Don't want to see that. I would say with these patterns, I wouldn't look for it to be considered, disintegrated until we really get another test of the neckline. And of course, if it goes down below that neckline, the pattern's completely busted. But right now, it's still trying to execute. We haven't gone down and test that neckline yet. So I think we've still got to move here to the upside to experience. I'm not overly worried about this PMO sell signal. I think it's what we got back here. I think it's going to be a bull kiss, but we'll have to pay close attention to see if that holds up or not. I'm going to look at oil very quickly on it, and then bonds. Oil, I am still bullish on oil at this point. PMO is definitely overbought, and it looks like it's decelerating, but I see what could be a flag here. I've been looking for it to at least get up here above, get up there to 12. We're going to certainly see another test, I think, of this area of overhead resistance. But there's a nice long-term buy signal. You can see the EMAs are spread out very nicely, very positive. So at this point, I am still bullish on oil. I would be looking for it to test that 1160 area for USO. Bonds, not quite so much. They looked, again, this is one of those situations. The last time I wrote about bonds, they were looking pretty good. We just got that intermediate term trend model buy signal, and the PMO had given us a buy signal, and then we gapped down and we're moving lower. At this point, when you look, I would be watching this PMO. It's topping. but it still could turn itself back around. But look at the OBV here; it's pretty ugly. So I have to say I'm going to be bearish on bonds. I would look for a test of that 200-day EMA at a minimum, and that really concludes the decision point report. And of course, we're 20 seconds over our kill time here. So
no problem. Certainly appreciate the update. Now I know we didn't talk about the sentiment on Friday because you weren't here, so I don't know. I guess we wait until later this week to go through.
yes, we didn't give our what do you think is going to happen this week, and now it's kind of cheating. We've already had like half a day. I don't know. I'm thinking we'll just skip it this week, and we'll see what happens next week.
Well, we're pretty flat on the S&P 500. I would just say I'm bullish. I like the fact that the yield's rising again. I think money's coming out of the bond market. This is the time of the month where we tend to start looking toward money flows. The middle of the month, money flows. The market tends to do well this time of the month. And I see some key areas hitting some solid support areas like the banks and financials in general. I think industrials are getting closer to support. We've got other areas of the market either testing support like the XLV healthcare. While we're seeing other areas break out, we've had great action in energy recently, and now we're getting consumer discretionary breaking out, oversold conditions in XLP, consumer staples starting to rebound there. So I think the market's going to continue to move higher this week. Obviously, some of these economic reports could throw a monkey wrench. We'll have to watch that, but I expect we'll see higher yields, and that'll lead to higher S&P 500 prices. What are you watching as you go into the close today?
Oh, what am I watching? Well, I'm trying to get myself reacquainted with what's been going on in the market since I missed Friday. I would say, really, I would be paying attention to. I think that I'm going to actually. Do I have the screen? Because I can just pull this chart up for the S&P. I don't like these sell signals. What I'm going to actually be watching for is looking at what's going to happen here with that NASDAQ PMO buy signal. I want to see whether we're going to start seeing some real weakness in the NASDAQ. We're just not seeing it. This NASDAQ 100 finally starting to get some momentum shifting, but it's still not negative. So I really want to watch and see what's going on with NASDAQ 100 and its PMO.
All right, there you have it. Another show is a wrap. I do want to make just a couple of quick announcements. On Wednesday, Greg Morris will be joining Market Watchers Live. So if you follow Greg and his blog, he's been tracking stocks and doing technical analysis for over 4 decades. So a lot of information and knowledge there that we'll certainly all enjoy on Wednesday. So definitely be with us on Wednesday for that. Greg Schnell will be back with us on Thursday. He's going to be talking about point and figure charts. So for those of you who like to look at the point and figures or want to learn more, I would suggest that you be with us on Thursday to listen to Greg's presentation there. And then again, Friday, Aaron will be doing an educational segment on chart patterns. So showing you the different types of chart patterns that you might want to take a look at when they execute, some of the measurements, the targets that you can look for, and that sort of thing. So be another great show on Friday as well. I do want to thank everybody for stopping by today. Always a great time here at Market Watchers Live. As you leave, if you don't mind, lower right-hand part of your screen, how'd we do? You can go in there. There's a link for a very, very brief survey. We'd love to know what you thought of today's show and what you think of Market Watchers Live in general. And if you have any suggestions for improvement, we'd love to hear that as well. As a reminder, Market Watchers Live is now airing 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll be back tomorrow. Happy trading.